Hi everyone, I'm Ty Tornicasa at Ty Financial. Welcome to Coffee Time Tips with Ty. Today we're going to talk about the basics of investing. Whether if you're a newbie to investing or you just want a refresher, understanding the main types of investments, stocks, bonds, and mutual funds is a great place to start. By the end of this video, you'll have a clear understanding of what these are, how they work, and how you can fit them into your financial goals. So pull up to the starting line, rev those engines, and let's get started. What is investing? Investing is all about putting your money to work so it grows over time. Instead of just saving it in a bank account, investing involves buying assets that have potential to increase in value. Does that seem like a lot of work? Why invest? Well, it can help you build wealth, help you stay ahead of inflation, and achieve long-term goals like buying a house or retiring comfortably. Investing involves some risk, but it also has the potential for higher rewards than your traditional savings account. What are stocks? Stocks represent ownership in a company. When you buy a stock, you become a shareholder, which means you own a small sliver of that company. How do stocks work? The value of the stock goes up or goes down based on how well the company performs and market demand. Stocks can grow in value, and some pay dividends, which are regular payments to shareholders. Example, imagine you invest in a company like a popular coffee chain. If the company opens more stores and makes more money, the value of your stock may go up. The risk and reward. Stocks have higher growth potential, typically, but they can also be more volatile, meaning the value can change rapidly. They're best suited for long-term goals because they tend to grow over time despite short-term ups and downs. What are bonds? Bonds are essentially loans you give the company or the government. In return, they promise to pay you back with interest. How do bonds work? Bonds provide regular interest payments, making them a stable income source. At the end of the bond term, called maturity date, they give you back your initial investment. Here's an example. You buy a bond for $1,000 from the government, it's going to pay you 5% interest. You earn $50 each year until the bond matures. The risk and reward. Bonds are typically less risky than stocks, but they often offer lower returns. They're great for balancing risk in your investment portfolio. What are mutual funds? A mutual fund is a pool of money from many investors to buy a mix of stocks, bonds, and other assets. A professional manager handles the investments so you don't have to. How do mutual funds work? When you invest in a mutual fund, you own a share of the entire pool of investments. Funds can focus on specific industries like technology or be more broad and diversified across the whole market. An example, let's say you invest in a mutual fund that includes stocks of 50 different companies. If one company doesn't perform well and the others can potentially help balance that out. The risk and reward, mutual funds offer diversification, which helps reduce risk. They usually come with fees for professional management, so it's important to compare all your options. Now that we cover stocks, bonds, and mutual funds, here's how they can work together. Diversification is really key. A mix of stocks and bonds help balance risk and reward. Stocks offer growth potential while bonds provide some stability. So start off small, stay consistent. You don't need a lot of money to start investing. Many platforms allow you to invest as little as $50. Match your investments to your goals. For long-term goals like retirement, consider focusing on more stocks. For short-term goals, bonds or mutual funds might be a safer bet. And that's it. That's the basics of investing. Stocks, bonds, and mutual funds are the building blocks for a strong investment portfolio. Remember, investing is a journey, not a sprint. Start small, diversify, and stay focused on your long-term goals. If you have any questions or want to learn more about getting started, reach out. I'd love to help. I'm Ty Tornicasa at Ty Financial, where we help you live for today, save for tomorrow, and plan for the unexpected. Thank you for watching, and I'll see you next time.